Hi everyone. Today is Wednesday, May 28th, and this is another show of Bitcoin Intelligence. We are going to review the 12th version of the BI report, and we have Wizard with us today. Hi Wizard, how are you?
I'm doing great. Doing great.
All right, so let's get to the cut to the chase without much discussion. I have our report shared here. So if you are a premium user, you should have access to the full article. Always, we publish these every week. Always, you get a one piece from macroeconomics and one piece from on-chain data. So in this piece published on Monday, 26, we talked about the oscillation between two Trumps. One is the capitalist, one is the protectionist, and we've seen these two emerge at different times. Initially, market after election, market was looking for the capitalist. They surged. Then the tariff man appeared, and the markets crashed. Then he began easing tariffs, and people priced in growth. Then looks like a lot of tariffs will remain, although at a lower level. So markets were a little bit worried. They're still worried, and they're in an undecided place. So there is this on and off going on, and we're just trying to clarify that there are two regimes here that are against each other, and they're actually following a contradictory policies. So, for example, if you look at this table, we mentioned that the tariff man wants to reshore manufacturing, but that also means they have to block a lot of cheap imports, which will increase prices. But the capitalist Trump wants to reduce inflation. These are in contradiction. He wants to make supply chains more independent and resilient, but that's going to kill the efficiency. He wants to reduce trade deficit, but that will also reduce economic growth. So the capitalist Trump will be unhappy. He wants to decouple from the world and give up the exorbitant privilege that's causing Triffin's dilemma. But the capitalist Trump wants to preserve dollar supremacy and lead the global community. So lots of contradictions, and so they can't happen together. One has to win. And our argument in this report is that we believe, let me find it. We believe that it's going to be the capitalist Trump that will win. And even though we will have back and forth where markets get worried at times and begin pricing in the protectionist man, and then we will see temporary corrections. But over time, we should see capitalists come back and win big, and that's going to happen soon, later this year. Basically, a couple powerful forces that are going for the capitalists are tax cuts and fiscal stimulus that comes from it. Tax cuts are making great progress. Pretty much, very, very likely that it will pass the Senate as well, and it's going to be signed by Trump. The Senate will change it a little bit compared to the House version, which got passed, but they will only add more spending to it. It's very unlikely that they'll make a huge reduction. And the way the tax bill is written, it's going to add to the deficit massive amounts. So we're not getting a contraction. We're actually getting more spending. So that's going to be very pro-market, right? From an economic perspective, you might not like deficits, but more deficit will definitely drive up the asset prices in Bitcoin and gold and pretty much all hard assets. So that's going to be positive for Bitcoin price. Then we got deregulation. Depending on how much they succeed, that will be pro-growth. Well, this would be very fundamentally positive as opposed to deficit. And basically, they'll try to scale back environmental restrictions and, more importantly, finance and banking restrictions. A lot of these restrictions were put in place after Trump. After 2008, they limited banks by a huge amount to prevent another similar unwind of leverage happening. But the result was that now banks cannot really go out and take the risk they need to fund business activity. So if they dial back on some of those rules and restrictions like SLR or RWA, then they will be helping. They will be able to take on more risk and provide more liquidity to investors and entrepreneurs. Renault, which is who's our most recent analyst added to the team, he's an expert on financial plumbing, and you will hear more from him in the coming weeks. He will dissect these issues in more depth. The other part of the report is on-chain analytics, and I'll let Wizard discuss it. Again, if you're a premium user, you should be able to see this full report. And if not, you're only probably seeing the first part of it. If not, just go on. If you want the full access, go on to 21stcapital.com/BI and sign up for our premium service. A couple more things before we move on. It's also important to take a step back and look at where we are in Bitcoin land. Here's a power law model, which this line is capturing the average price, average expected price of the market, and we have exceeded it. I mean, this is a line we have been discussing since, I guess, last year. Yeah, so this line has been anchoring the price, and price went down below it, and it came back up, went way above it, and actually was showing a bubble mini bubble formation after the exuberance because of Trump election, and then we crashed below it. Then we claim it back. Now we are above it, so we are a fair amount above it, but this is somewhat being above that line is expected because we are in a bull market, and if we actually go towards a cycle top, we will be separate. We will be above this line for some time, but eventually come back down. And here's our VPLI index, excuse me, that shows the quantifies that gap. And basically right now it shows that the index is at 54 out of 100, meaning that we are actually not too different, not too far from the fair price that this model would predict. We would be much higher before this VPLI index flashes an orange or red line. So we're kind of close to fair value. That's what you can get from this line. And then here's our Bitcoin quantile model that captures the range of outcomes for Bitcoin over its lifetime. And if we take a closer look, you would see that at 107, we have a risk score of 63, meaning that if this is the whole range of price action, we are 63% of the way through the probability distribution. So in other words, 2/3 of the time progress is complete in the cycle, and 1/3 of price action is left, which that 1/3 could actually be a lot of explosive price action. So at 110, we aren't really even entering the overheated place. We're still playing in this transition zone. We had an attempt to break through the yellow region acceleration, but it seems to have failed. So we will probably bounce around here and there before an eventual break to the upside. Now, if we follow similar pattern to the prior cycles, we are looking at least a doubling of price sometime by the cycle top, perhaps later this year. But it seems very ambitious, right, for the price to double. But Bitcoin has done much more in prior cycles. We will see. Right now, I don't think, in the short term, in the next few months, this will happen. But towards the end of the year, a lot of positive things are coming for Bitcoin. Now, with that, I guess we can wrap up our update and switch back to Wizard.
Nice one. Nice. So can you hear me?
Yes.
Okay,
we now
perfect.
see your screen.
Perfect. So, like, you put it really nice. Like, we were above the fair value from many models perspective. I mean, not just on-chain. A couple of the technical models, like I call quantile kind of like technical, which I believe they purely use the price to model the quantiles, or any similar model that is very correlated with price. Most of them were showing we were above the fair value, but if you go through all of them, you can also find this common implication that we are not way above the fair value. And when we go to the on-chain, we will see this the case in on-chain model as well. When we say too much above, it's like for first time we got to 105, 108. We are not in the situation like that. Or for first time we reached to 64, 65, I think in 2020. We're not in the same level of risk in the market, but still elevated. That's why we should be really careful. We have had two rallies to new all-time high, one to above, I think it was, I don't know, 70 something in March, April 2024, then one in December. So market already have been through two large wave of profit taking, or I would say energy was released through profit for whoever was spending during that rally. So that being said, we cannot say because we had two rally, it is impossible to have a new one. But if you want to think logically, in a matter of 2 years, if we want to have three all-time high, every time the probability of the next rally to new all-time is going to be less and less. That is the negative side, and I want to just try to be agnostic, but like last 2 or 3 reports, I have to clearly say that I have been bearish because I thought, and I believe still, that the long-term holder spending and also too much bullishness about the MicroStrategy and other uh, financial vehicle was built based on Bitcoin. They did the job. They caused the spot market pushing the price up. The ETFs did have their own weight on the recent rally. That's why we call the spot-driven rally in the last 2 or 3 report. All of them did what they could. We need a catalyst, a very strong catalyst. Otherwise, we have had a lot of spending, and that spending needs some time or probably correction to heal, to just make another base for the next rally up. It could be a matter of months, or it could be a matter of years. No one can say it for sure. And if you notice, like last report, we talked about 10.8. I want to just work on that and say why we use that price, remind everyone why that price was important. That price was important because it was around one standard deviation above the cost basis of the short-term holders. Why was that important? Why we care about the short-term holder cost basis? Like previous reports, we use this cost basis a lot. The reason is because the recent buyers have a sentiment towards market that is determined by the price being above or below their cost basis. When price is above their cost basis, means most of them, majority of them, are in profit, and stabilizing above the cost basis is going to encourage a lot of new investors to join the market because they see the price staying above their cost basis. Why not? Let's buy. We're going to be in another euphoria. Let's stay in the market. So that is a positive signal going back and forth between price and the behavior of the short-term holders. So meanwhile we are above that cost basis. We are in bull market in a sense. And how far we go above that, we use the statistical bands here, and half a standard deviation is a very nice, like, mid bull market resistance that if we break above, there is a high chance that to reach the one standard deviation. And what happened at 104, we reached to half a standard deviation. We had a week of market going sideways. Then we had a jump to one standard deviation, which was around 111. And as you saw, price was struggling since then to break above that, because one standard deviation is pretty significant. If you look at the post all-time high in May 2024, we had the same situation. We rallied to the one standard deviation, half a standard deviation. We couldn't go above. And back in March, we went all the way again to one standard deviation. Then market started to correct even further. So the chance that market start to go to a sideways or bearish market after failing to break above 1010 is going to be more and more if we keep failing to break above that. In case we have a catalyst in coming days, all eyes are on around 1.5 standard deviation, which is around almost 118, and that was the price that we already discussed. And if we fail to do so, 104 again, and cost basis of 95 or almost 96,000 are the resistant supports that we would expect. The sellers get exhausted, like the people who were fearing the further correction are going to get out of the market at a small profit or a very small loss. These are the price that we're going to watch, but breaking below 96 is going to be a very negative signal in the market, because that means the majority of the buyers in recent rally, all the way from 80 something to 1010, 1011, they are all going to be in fear. Oh my god, like market, this is a bear market, I have to get out of the market. So as far as we're above 95, 96, and that price needs, that price have to be updated on a daily basis. As you can see, cost basis of the short-term is the dynamic concept. You have to look at it every day. As far as we're above that, we can say there is a hope that we are keep continue going up. But 104 and 96 are the prices below the current price. That was the base for being cautious about 111, and it turned out that market couldn't go break above 110. And in the report, if you go down, we started to talk about the, again, build on this premises that one of the major reasons that we are seeing this rallies to new all-time high after seeing 74, 76 in March 2024 was the ETFs, institutional contribution in the spot market. And the election itself and SBR might not lead to having US government buying the Bitcoin itself, but it sent a positive signal to public and private companies specifically to buy Bitcoin, because they had some fear regarding the, is it Bitcoin is going to be legal? Is it US? Is it going to be the case that government is going to go break down on like all treasuries? That turned out to be no, that was no fear. At least for Bitcoin, it was very positive sentiment in the market after the SBR was signed out, even though they remained neutral and they just ripped off the label of the coin seized through multiple like Silk Road case, and they just named it SBR. But the positive signal that was sent to the market, and thanks to ETFs, you could see in every leg up above 74,000, like in December 2024, and the recent leg from 84, you could see the footprint of the institutions. For example, look at the ETFs. They are reaching to a new all-time high, and around 1.2, 1.21 million coins is just managed or being like held at the wallets attributed to the US spot market, let alone the Canada and other countries, El Salvador, all of them have coin, Bhutan, all of them have Bitcoin. But the ETF, the US market itself, showed a very strong appetite to just acquire Bitcoin. Even the recent rally, you could see we reached to a new all-time high compared to late February 2025, which is really astonishing. And on top of that, if you look at the trade volume on the ETF, the brokers, the brokers, the official stock market that trade the ETF tickers, this is the blue one. In the recent rally, both spot market on the centralized exchanges like Binance, Coinbase, and the trade volume on ETFs, they both reached to a very significant level, almost $8 billion per day, which is really significant. So a spot-driven rally was a very proper name for recent rally, specifically the footprint of the institutions, positive signal by the SBR and new administration was really felt in this market. And if you look at the cost basis of the ETFs, especially IBIT and ARK. You could see they are around like I think there's around 52 for ARK, 59 because ARK started to accumulate faster at the beginning, and ARK and Fidelity and BlackRock are 59 and 72. If you look at the market and go back, this is very similar to what we saw in March 2024. If you look at the margin of profit, the size of profit for the ETF holders. So that being said, given the rally that we had recently from 74 all the way to 110 was driven by the ETF holders. I mean, not all of it, but they showed a really strong appetite to accumulate Bitcoin through the rally. That comes with the risk because now they are at a very significant profit, especially if you look at Tradify. They're not used to, I mean, they are really try to be logical. They're not going to wait for 10x or 6 months. As soon as they reach to a reasonable profit, they might start to take some profit. If you look at the volatility of the monthly volatility or look at the MVRV of the market, you could see it is damping. It could be one of the consequences of the Tradify joining the market. They're not waiting for crazy euphoria. They just start to trim some profit as soon as they get to, I don't know, 30%, 40%. There's no golden number, but you could see their behavior is affecting the market volatility. And here, in terms of the ETFs, we are in a zone that we have not experienced a really long life post ETF launching, but in a 1 year plus I think 14 months now, almost 14 months, we saw every time we got to that much profit margin, they start to spend. And now this is the beginning of the risky market stage. If you want to just look at it from the ETF perspective, of course, there are 10, 20, hundreds other different metrics that we should look at it. But if you want to just look at the weight of the ETFs and say, okay, they were really contributing in the recent rally, so I should care about their profit margin. If you want to just look at it from that perspective, they are getting to a range that it used to be a range that they start to take some profit. So that's the beginning of like the case. But if I want to open a parenthesis and build and try to show how the U.S. government signing the executive order on the SBR affected the market, look at what happened after election. After election, you could see the MicroStrategy ramped off the buying pressure way faster than it used to be. Yes, Michael Saylor was buying all the way to election, but after election, you could see, and after the SBR was signed, you could see other companies like the I think is XXI, I think is Mara, I think it's a mining company, and Metaplanet. You are seeing their names a lot recently. They are start to buy more Bitcoin after election. Not that they didn't want to. I believe this is showing how the legalization. Bitcoin was legal, but I mean, sending a positive signal of government can affect the behavior of the public and private companies specifically. All of them had a strong buy after the price started to break above 80 something, and that was a major factor pushing the price to 1010. After going over all the facts that caused this rally, I want to go over the derivatives because in the reports we talked about it. In terms of BTC, the size of the futures market almost reached a new all-time high. We're still a little bit shy of 710, I think. 710,000 was the all-time high. We're around 700,000. Why is it significant? That means all the way from late February till early or mid-May, we were almost just going sideways. We were not seeing a strong rally. We didn't see the futures market speculate about the price. So you could see the OI was going sideways. And I have to say, a lot of people look at the OI in USD term because it is so correlated to the price that would cause some misinterpretation because people saying, oh, it's going up. If the OI is going up with price going up, part of it is because the value of those contracts are going up because of the USD dollar, BTC price going up. You have to look at it BTC term if you want to really looking at behavior of the futures market traders. If in BTC term OI goes up, that means new contracts are getting open, like they are being open, and they are start to speculate. Usually, if it is through a rally, that is positive. That could add some juice to the rally. At the same time, it is adding to the risk in the market, because usually these leverage traders are bearing a lot of risk. They are on, like, I don't know, look at Binance. They have up to 100x. That is causing some risk, but it is bringing some liquidity to the market. As you can see, after 104, the OI jumped up in BTC term, like almost in matter of 2 or 3 days. And that was another driving force for going above the 104 all the way to 111, 110.8 thousand dollar. So that is bringing risk. But if the funding rate, like we spoke about it 2 or 3 weeks ago, if the funding rate follow up the OI and spot remain resilient, we do not break below 104 or stay in the same range, that could be another reason to see price go to 118. But if the price goes sideways, these positions are paying funding rates. They cannot stay open forever. So they're just bleeding. They are high leverage positions, and they're going sideways is very, very painful for them. So we need the rally to just start. Otherwise, the OI start to just go sideways or start to decline. And that means they are just either getting liquidated or they get disappointed. And some of them are trying to bet on the other side of the market. That's why they close the position and they open another position. So this is what we have to look at it. If you look at the funding rate across all assets, all major assets, I think it's top 20 something assets by CoinGlass, and go back all the way to November, you could see after we broke above around, I think 80,000, 85, you could see all assets start to have a high or heated funding rate. When we broke above 104, we could see that heated funding rate was showing up across all assets, but we have not seen a thick, persistent range of heated funding rate in the market yet. It is a good sign that we're seeing some of them start, like, I don't know, DOT, all shitcoins, AVAX, Litecoin, Link, BNB, all of them are showing some positive funding rate. But in order to see a euphoria, with OI going up, with spot being strong, we need to see this funding rate catch up. They are starting to, but we need like longer rally. We need staying above 104. We need short-term holders be hopeful that, okay, market is going to still go up. So it is too early to say, hey, funding rate is going to cause, because if we go back, all the rallies have a very strong spot, and the continuation of the price momentum is really relying on the futures market. They're joining the market a little bit late, but when they join, they bring a lot of liquidity and risk to the market. They start to come in, but they have not joined the party like as much as they had joined in November before the election. We have to watch this in a live mode and see what is happening every day. So yeah, we were ready to go up. Yeah.
But the latest increase from the 75,000 low, which was early this, like from March to up to this point, it had very little participation from futures, right?
Exactly. It was
Except,
spot.
yeah, just a little bit here and there. You see the market, the heat map is getting hotter, but not by a huge amount.
Exactly. That is the beauty. And even if you go back, look at the price, there was 70 something when we were reaching to the previous all-time high. The spot market was the main driver to reach the recent run. Then the futures market start to add liquidity. Not that spot market stopped pushing the price up, but the futures market joined the party a little bit late. And I was hoping to see this. I mean, still hopeful. I'm not saying it's over, but we need the price to stay above 104. Then we could see the OI going up. These people are seeing price going up, so more incentive for new traders, less funding rates payment because price is going up, and the time component is not pushing, I mean, causing damage for the long side holders. So we have to see price going up. If it goes sideways, the synergy that was created in the futures market is very vulnerable to time as well. And to wrap up, what was concerning since we were around 110, and what I tweeted about, I saw a lot of backlash about it, like, oh, what you talk about. First of all, we have to look at the amount of profitability in the market. It was skyrocketing. When we went to 1010, obviously the price is above the cost basis of almost any coin because we are seeing a new all-time high. Any coin bought, sold, moved, have a cost basis of below the new all-time high, obviously. That's why you see the ratio between the profit in the market, unrealized profit, positive energy to the market, divided by the negative energy or loss in the market was, because this is in logarithm, this is shown in a log, but it's going to the like almost 100,000, like because it's the amount of denominator, which is the loss, is very small. And now it's cooling down because price was hitting 110, and a lot of people were excited. A lot of people moved their coins and bought at top. It's FOMO. It's because people are so happy about the price. You could see a large or significant amount of supply moves around the peaks, and a little bit correction from even 1010 to 107 is going to cause this ratio drop drastically. That means a little bit movement from the all-time high, a drawdown from all-time high, is going to put a lot of people in loss because they bought at the top. As you can see in previous, at least tops in this cycle, the actual top was formed 1 or 2 weeks after this peak. So seeing this peak, that doesn't mean, hey, the rally is over. It means it's like you're kicking a ball. The kicking happened. There is a high chance the ball continue going up. It is close to forming a top. It is very close to seeing, okay, these people who are in loss start to be reacting to fear and start to spend. That is the possibility. That is something that the top buyers usually do after a little bit correction and add to the downward pressure. That is very high. It has a very high possibility. But if you look at the historical peaks, they usually the price keep going, and the actual top happened after seeing that peak. So even though this is starting to look a little bit negative, but historically speaking, especially recent history, we could see there is still hope that price go up and see a slightly higher numbers. But all of it is depending on price staying above 104. Below 104, a majority of coins moved at top are going to be in loss, and you need a lot of demand to face their selling pressure. Let's see what happens. The tweet, or the fact that it is a fact that I talked about, I didn't speculate, but because the implication was a negative implication, it got a lot of backlash, was long-term holder are spending. That is the message. And a lot of people are saying, oh, you're wrong, long-term holder supply is going up, so they're not spending. So I want to clarify here what I mean, and I think is going to help people to make a better decision. First of all, yes, if you look at the supply owned by long-term holder, it is going up. That means the people who are holding their coins plus 6 months, if you look at the number of coins, it is growing. The hodling sentiment is dominant. Like in general, market is in a mood that saying the investors prefer to hold their coins rather to spend. Like they rather to hold, not to spend during this rally, which generally is a positive thing. But the long-term holder cohort is a very general concept. You have to look behind what is long-term holder. Who are long-term holders? And supply owned by long-term going up, meaning what? Supply owned by long-term holders going up is a net change in the long-term holders. I'm going to just make an example. Imagine we have 1,000 coins owned by the long-term holder. Means these coins have an age of 6 months or more. That is 1,000 coins owned by them. Today, those 1,000 coins owned by a long-term holder, those long-term holders decide to spend 100 of them. Okay, so typically their supply is going to drop from 1,000 to 900. That is one side. But the other thing that's happening in the market is the coin maturation. There could be 300 coins that had an age of 5 months, 29 days. And that 300 tomorrow is going to be long-term holders. Even though we spend like around 100 coins as a long-term holder, because 300 coins are joining or moving to the long-term holder basket, on a net basis, the long-term holder supply goes by 200. Tomorrow we're going to have 1200. So you look at it and say, hey, long-term holder are going up. That means they're hodling. No, they're spending, but the new long-term holder are joining to the long-term holder cohort, and the net value you see is going up. But if you want to look at the long-term holders' behavior that used to be long-term holder yesterday, you have to just look at their spending volume. You have to see how much they spend. Yes, the net value of the supply might go up. A lot of the 5-month, 29 days kind of investors who bought at the top, they're hodling, and that caused the long-term to go up. But the long-term holder who held plus 1 year, a very older sub cohort of the long-term holder, they are very important as well. If you look at their spending volume, this is their spending volume in USD. You could see the investors who held plus 1 year, they were like cashing out plus 1.4 million per day on average. And historically, it's a very significant amount of volume by these long-term holder. Yeah, we went to 2 billion. I mean, for a very short amount of time, plus 182 billion. But these are like very temporary. After seeing two top in this rally, a number above 1.4 billion, it could be risky. It's a risky number. And look, if you look at the share of the older cohorts, which is 3 to 5, let me turn it off, turn on. This time, this sell-off was by the even older sub-cohort of the long-term holders versus the top at 108 that we had early 2025. It was mostly 1 to 2 years. Look, when we got here, we had these long-term holder selling. But right now, we have almost 3 to 5 years ago, so like 2022, the bottom buyers are selling now. This is significant. So in both cases, long-term holder are selling. But the long-term holder in this case are the people who bought like recently. I mean, look at here. 1 year ago, 2024, it's going to be 2023. The people who bought here, like at the sideway, but the people who are selling now are the long-term holders who bought at the bottom, at absolute bottom. So I call these people are the legends who bought at the bottom and selling now. That being said, I'm not saying this is the top. What I'm saying is do not misinterpret the supply owned by long-term holder going up, so market is bullish. No, you have to look what's happening in behind. Supply owned by long-term holder going up means on a net basis, market decided to huddle. But is market always correct? No, they might huddle. They decided to huddle after the second top in 2021 as well, like October 2021, and the market started to crash. They decided to huddle after Luna as well. Then FTX happened. So if market decide to huddle, that doesn't mean they're correct. It just means they're huddling. If you want to really see the selling pressure of a long-term holder, you have to just look at their spending by long-term holder. We should factor out or discount the coins that they were short-term holder yesterday and now they're long-term holder. I hope I'll be clear. Sina, how was it? Like, did you get what was the message?
Yeah, basically the way I summarize it for myself is long-term holder is a huge basket. Some of them just graduated from short-term to long-term. Some other ones have been long-term holders for years, and it sends different message if the early long-term holders are selling or if the old guys are selling. And in this case, what you're highlighting is the strongest hands who bought at the bear market, at the bottom of the bear market, are now starting to take some profits.
Exactly. And if I want to show you why it matters, why we care about the older long-term holders, like that would be a logical question. Just look at the amount of profit being taken off the market, like how much energy. I call it energy. Let's say market is having some energy. That energy caused the price to go 110. When that energy start to be released or extracted from the market, obviously it's going to affect the momentum in the market, right? So let's look at like last couple of weeks. Over the last couple of weeks, the amount of profit taken off the table reached to 108. This is the 7-day moving average, by the way, so it's a little bit smooth out.
So the aggregate in this case aggregates everyone, right? Including
everyone. Short-term, long-term. It was 1.8 billion. But when you look at the 1 year to 5 year, like really OG long-term holder, they are making almost 500, 800, around 900 million of that 1.50% of that profit was realized by the 1 year to 5 year. If you go back compared to like recent rallies, yes, we had a very large amount of like profit taken by the market in general. That is correct. But if you want to solely rely on the long-term holder and see, I want to make a decision based on long-term holder behavior. I don't care how much market is profitable in general. Short-term holder might have seen the opportunity here, and the price moved so fast, and they could extract a lot of more profit. But if I want to just solely look at the long-term holders that held through the rally, held through the election, they just held through the ETF launching, and now they are spending at comparable levels to recent two tops. That is alarming, but we have to consider other factors as well.
Can you eliminate some more categories to see, so we can see the super long
Younger
holders?
or super young? Okay, like let's say look at the 3 to 5 year. These are absolute bottom buyers. Absolute, but every time they spend, they are absolute bottom buyers. Look, and let's add 5 to 7 years, which is it is not the case in so 5 to 7 years is not really nice long term, because in last cycle we didn't have much 5 to 7 year active investors, so that's why I rely on that one. But if you want to turn on the recently graduated long term holders as well to the long term holders, like which is 6 month to 12 month, yes, they were the one that were making that the other 50%. So they were like the main spender in previous time. But right now, we're not seeing a lot of 6 month to 12 month holder or recently graduated long-term holders are spending, because 6 month to 12 month ago, look at the 6 month ago, we were at top. That's why they're not realizing any profit. They have no profit 6 month to 12 month. That's why we have to discount them. If you want to compare to the previous cycles, we have to look at the 1 year to 5 year ones, because they are the absolute bottom buyers. They are at very fat profit, is sitting on profit, and their behavior when they start to spend, every coin spent by the OGs is going to release enough energy that is equivalent to 10 coins by the recently graduated, because of the size of the profit they are releasing by every coin, realizing by every coin moving and or selling. That being said, if I want to give one metric to people to track and see when those OGs are really spending, and are they spending at very fast pace, if I want to put all the concept in one chart, I will have to talk about this metric. It's called VDD, value days destroyed multiple. I just want to just make it simple. This metric is the price weighted of amount of time released in the market today. What do I mean? Like if a coin that was held 100 days ago and it is spent today, is going to release amount of time to 100 coins that was purchased yesterday. So it is the amount of time energy released in the market. And here we are comparing the daily with the yearly moving average. So when this metric reaches to around 2, if you go back, every time we reach 2, we had at least a local top. Right now, we have not reached to even 2. We are around 1.5 almost. But we had already a huge spending, and I would say 1, 2, 3, 4 wave of spending, because it was above 2. So the probability of the reaching another 2 after seeing all this wave of spending by the long-term holder, it is less and less. But you never know. Like you should always be agnostic and wait for this metric to get above 2, then say, hey, this is super risky. This is the metric that if we get to the heated zone, is going to help us to start to trim our position or save some profit. But at the moment, it is elevated, which contradicts the public belief that, hey, long-term holders are not spending. That was the reason I used this chart to show, no, they're spending, and they're spending at an elevated level. So if you are relying on the statement that the long-term holders are not spending and make a decision, that is a wrong input. Correct your input. Yes, they're spending. It's not as level as what we had in previous top, But if you want to give it high weight to the OG absolute bottom buyers, they're selling. Now make your decision. I'm not implying anything. I'm not saying this is the top. I'm not saying this is going to go crash. Just want to correct the input that our audiences are taking in their decision making process.
Yeah, and definitely if this goes higher, we'll be watching this. If this goes higher to 2 or above 2, then it's a much more clear signal in terms of the market risk.
Exactly.
All right, I think we covered the whole report in 45 minutes. Every time we want to, make it more dense, but by the time we cover everything, we are closer to 1 hour. But time flies when we look at the Bitcoin data.
Yeah.
Yeah. So since we published it on Monday to today, have you noticed any other interesting trends or interesting development?
I really did not expect the long-term holder to spend that much. That was what changed, because I was getting concerned. This report was out like 3 or 4 days before the tweet I did this morning. So I was concerned about long-term holder. That's why in the report, I believe somewhere I said we should watch the long-term holders. And then this morning, when I look at their spending, I thought, wow, the bottom buyers are selling. So my fear was correct. But let's see, because even look at the price right now, we're going at 107. I think I didn't check now. I'm not saying it was purely was predictable by the long-term holder spending, but it is a sign that the long-term holder spending is affecting the market. How far they're going to go, no one knows. But like I said at the beginning, 104, which is half a standard deviation above the short-term holder, we should stay above that before calling for high numbers. If we keep getting chopping down and downward pressure pushes us towards 104, and sad news to bulls, if we break below that, the probability or the risk of going below the short-term holder cost basis goes up exponentially. So those are the numbers that we have to watch closely. And there are a lot of platforms like the ones that we showed here, like Check and Chain, are offering those metrics. And hopefully 21st Capital is going to have its own platform and users are going to see it. Hopefully we're going to have an alarm. I think these are the metrics that you should follow. The VDD, cost basis of short-term holder, half a standard deviation above, below, and the cost basis itself. These are a couple of metrics that is going to help you to navigate the market in coming weeks.
Yeah, and it's interesting that we are seeing multiple forces, like the long-term holders are selling. Obviously, that means they are not too bullish, at least. And we have also been discussing that the market is more likely to chop for a few weeks. In the last couple of our reports, we've been saying the recovery has been fantastic. We've been discussing it for a while, but right now it is a little bit overextended. So it doesn't really surprise us if we go up and down for a while. And seems like long-term holders selling and elevated profit taking in other cohorts. Seems that there is still not a huge amount of demand coming into the market. So again, we should keep seeing this is slow market for some time, and it aligns with our view of the macro as well, because we are still in the phase where the two Trumps, the protectionists and the capitalists, are fighting. The protectionist will lose, as we've discussed, but it still has not. So we have to give it some time for the effect of tariffs to pass through the economy and to get priced in and forgotten, and so the market can look past it towards the more bullish signs, right? So for that reason, we are still, in a phase where risks remain. And interestingly, we see the same thing in Bitcoin. So it's not. We're kind of in a neutral zone, and explosive price action is probably coming, not coming in the next few weeks. Probably takes some time. But over a longer period of time, towards the end of the year, I'm very positive, constructive on the market. I still can't believe that we are above 100,000. This still feels like a miracle, and a little bit lower, a little bit higher really wouldn't surprise me. My expectations are have panned out so far, and also not too extreme at this point. So yeah, thanks a lot. I appreciate your analysis. Again, another data packed session. Hopefully the audience and the premium users will find this useful. And we will be watching the data and talking to you next week. Thank you, Wizard. And thanks everyone
My pleasure.
for watching. Have a great day. Bye-bye.
Bye.